So your trading success is going to come down to many different factors. One of the main factors of your trading success is going to be your ability to accurately predict what the market's likely to do next. This is going to be one of the most valuable skills that you obtain on your journey to trading success. And although none of us have a crystal ball that's going to tell us 100% accurately exactly what the market's going to do all the time, we do have tools, and the market tends to leave us hints as to where it's likely to go next, like breadcrumbs in the famous novel Hansel and Gretel. Now, if you've never read the famous book Hansel and Gretel, in it, the two main characters, Hansel and Gretel, leave breadcrumbs as they wander through the forest to help them find their way back home. Guys, the market is leaving us breadcrumbs, and in this video, I'm going to help you to understand how to see them and also how we can use them to help make more accurate trading predictions. So if you're new here to the trading channel, I'd like to say welcome. My name is Steven, your honest trading coach, and if you are new and you like free educational content about Forex trading, I would suggest going below the video to the right hand side, clicking that subscribe button and notification bell. Also, if you feel like this information is going to be valuable to your trading, I would really appreciate it if you do a couple of things for me. One, go ahead and click that like button for me while the intro and disclaimer roll, and also share this video with anyone you know that's interested in trading. While you do that, I'm going to let the intro and disclaimer roll, and I'll see you guys on the other side. So traders, we're going to start this video off on the euro-dollar chart. And as we talked about before the intro and disclaimer, the market leaves us hints as to where it's likely to go next. And these hints lie in price action. These hints lie in things we call structure, support, resistance, and trend. Now, hold on before you click away from this video. I know that if you're struggling in your trading and you've been learning about trading for a while, you've probably seen hundreds of videos that talk about how important support, resistance, and trend are, yet they haven't actually been able to bring any value to your trading or help you become a more accurate trader. But I doubt that any of those videos went into the detail I'm going to go into today about structure and about trend, and also how we can combine the two in order to make more accurate trading predictions. So again, if you are brand new, you may not have seen any videos about structure, resistance, and support, or about trend, but I know that if you have been in the trading game for a while, you've definitely seen plenty of videos about this topic. But don't click away from this video, because I am going to be showing you guys a different way to look at this and a way to combine these two things to actually make your trading predictions more accurate. So let's go ahead and dive into it here on the euro-dollar chart. And before we talk about where the chart is now, let's go ahead and look at a clip we recorded last week on this pair, talking about where it may go based around these same hints we discussed. And then when we get back, we'll talk about that analysis, the exact hints we used, and we'll go further into detail about structure and trend. So let's take a look at that clip, and I'll be right back after it's over. The euro dollar waiting for one. Our first prediction is that this market possibly pushes back up into 1.19. In that region is where we get some type of entry region on a lower time frame to push the market down in trend continuation. That's the first thing we're going to be looking for this week. And if this market just continues down. All right, guys, so here we are back on the euro dollar. On this chart, as you can see, the market did exactly what we expected. We ended up getting this pullback after the market broke below our major level of structure. This pullback came up into around 1.195 in that area, put in some wicks to the high side, and has since rolled over, creating trend continuation, breaking into new lows. Now let's talk about these hints that we used in order to make this prediction. Well, of course, we had trend on our side. How do we know that? Well, this market is breaking down below multiple levels of major structure, breaking through support levels. That tells us that this market is pushing down into an actual downtrend. So now that we have that information, what we have to do in order to utilize the hints that the market's leaving behind is look to the left. We look to the left and we find the most recent resistance or support level that was broken, depending on trend. Of course, here we're in a downtrend, so we'd be looking for the most recent support level that was broken. If we're looking left, you can see that the most recent support level that was broken is right here. With that being the case, knowing that we're in a downtrend, the market's already giving us that hint by breaking support levels. We know that in a downtrend, we're likely to continue in that trend. We also now have a major level of structure that's been broken. That's another hint. This is a level the market's respected in the past, meaning that there are traders in at this level. Traders have bought here. Now that we've gotten below that level, These same traders that bought here may be getting scared. They've watched their money go up and then all the way back down to losing money. Now when we get back to that, they have the opportunity to break even. It's pretty likely that they're going to do so. That's just a little bit of the psychology. We're not going to dive into that too much in this video, but the things you need to pay attention to is the fact that we have a level of structure that's been previously tested in the past multiple times. That in itself, yes, is a very important thing. That's a good hint. That's a good hint to where the market may go. But not only do we have that going in our favor here on this exact trade, what we ended up getting as well is the market being already in a previous downtrend. So when you combine the two, when you say, okay, what I'm going to be waiting for is the market to be in trend, downtrend on the charts, then you can say, well, also I need the market after being in trend to break below a structure level. Right here, we have just broken below that structure level. Now, since we've broken below that structure level, I want to check and see if it's a level that's been tested multiple times in the past, because I know those levels are more likely to act as support and resistance. So if we have a level that's been tested multiple times in the past, we have a market that's in trend that just broke below that level, where do you think a really accurate place to be looking for trend continuation would be? At the level that was just previously broken, right? So that's what we ended up getting here on the euro dollar. We'll zoom in here. As you can see, the market pulled up into that previously multiple tested level of structure looking left, tested that here as resistance, here as support, and then the market pulling up to it and using it as resistance again, as you can see right here. Now, this is about as good of an entry as you could possibly get as well. What we have is this market pushing up to the level we pointed out in last week's video. We also have a shooting star candle, and this is not just a regular shooting star. This shooting star closed with no wick to the bottom side, meaning that at the end of the day, there was nothing but sellers in this market. So that's a very powerful sign. We have that going for us, plus the fact that this market tried to push all the way up to 1.2 even. 1.2 even is going to be an even handle number. It's going to be a very, very significant place in the market. So when you combine that even handle 1.2 number, this long wick to the top side, the close of this candle being at the very bottom, plus we're at a level of structure that's been tested multiple times, and we're in a downtrend. As you can see, you do have to combine many, many hints that the market's giving you, but once you combine them all, you have yourself a pretty accurate place to be looking for trend continuation out of a specific currency pair. Now, so since we've discussed what the market did, that's what we were looking at last week. What are we expecting out of this market this week based on the hints that the market's giving us? Well, the market's showing us that we have now pushed down into a level of structure. Now, in this case, we only have one hint going for us. As you can see previously, the trade that we just had on the euro dollar, we had multiple hints going for us. The market was in trend, plus coming up to that multiply tested level of structure. Now, this market's in a downtrend. That's obvious right now. So the fact of the matter is that we are coming into a level of previously tested support that has been tested multiple times in the past, but this is not going to give us as high likelihood of a chance of placing a trade because we're going against the underlying trend of the market. This pair, although we do believe that we could see a nice pause in this level, maybe a push back up to our previous resistance level. Again, look right here at the hint the market's giving us. It's giving us a hint that if we get a pullback into this area, it's an accurate place to look for possible trend continuation. So possibly getting a bounce from 1.1728 is not out of the question. That's something that we are expecting. And if we get a certain kind of entry reason that we look for in the EAP training program around this level, then it's something we will definitely consider as a trading opportunity. And that's what we're looking for at first this week. But the more accurate trade for this week is if we get a pullback, bounce off this level of structure, the pullback comes into the 1.185 zone. In this zone will be a nice level for us to look for possible trend continuation here at the trading channel out of the euro dollar. So that's what we're expecting out of this pair based on the hints that the market's giving us currently. So let's go ahead and move on now. We're going to take a look at 4 other pairs using the same type of analysis, using the same hints that the market's giving us. And the next one we are going to take a look at is going to be the dollar yen. Now here on the dollar yen, as you can see, we've had an obvious uptrend, an obvious reversal in market sentiment. We had a downtrend pushing down, creating a nice head and shoulders pattern. We called a good move off this head and shoulders pattern. And since then, this market has just pushed up, breaking into new highs over and over. Now, we did expect the 11 even handle to be a place that we could see, again, one of those little bounces, possibly a pushback down to previous resistance. But at this time, the dollar yen is in too strong of a trend to even have a pullback to previous resistance. So what's that telling us? Well, that's telling us that we definitely don't want to be considering trading opportunities here at 111. So currently this market hovering above that. What we will be looking for this week out of this pair, based on the hints that the market's giving us, if we look left, this is one of our previous levels of resistance. If we get above this level, then a nice level to look for trend continuation out of the dollar yen for us here at the trading channel is going to be a pullback into 111. That'll be a nice area to look and get a possible long entry, again, in trend continuation based on this higher time frame here on the daily chart. Now we could see a possible pullback into our previous resistance level as well, which is going to be another nice place to look for a trading opportunity, considering that resistance level around 110.2 has lined up with resistance previously in the past, along with support in the past as well. So that's what we're going to be looking at here on the dollar yen. We'll go ahead and speed through the rest of the pairs as well. Now we'll take a look at the dollar Swiss. The dollar Swiss is another pair that we had a nice prediction on last week that ended up working out. We actually ended up hitting one target on a trade we took in the EAP Training Program based on last week's predictions here on this pair as well. And what I'm going to do before we go over the analysis of this pair, I'll play you guys a quick clip of the analysis we had last week on this pair, and I'll be right back after that clip. Level of resistance. If we look left from where price action is now, looking left, we see that this is a very major level of resistance that pushed the market down pretty heavily in the past, meaning that we could see a possible bounce out of this level now. So with the market hovering where it's at, remember we're asking ourselves two questions. First question, how can we get involved in trend continuation? Well, we can get involved on pullbacks into 0.9950. That is a possibility. We could see that pullback. We could get involved here at 0.9950 for a possible long trade. But would we want to get involved long at this moment right now, around 1.003, 1.005 here on the dollar Swiss? No, of course not. The second question we have to ask ourselves is, where could the market stop? And if we're looking left, then this looks like a place that this market could stop and pull back. So with that being the case, being the fact that we're at a major level of structural resistance, we're not going to be looking for long trades, although we are in an uptrend. We'll wait to see if this market either pulls back or breaks through this level before we start looking for trend continuation up to our next structure level around 1.01 here on the dollar Swiss. And that's what we're going to be looking for this week on this pair, possible pullback into 0.9950 or a possible counter trend trade from where we are currently. Next up. So traders, as you can see in that clip, we were expecting this market to push down from our 1.003 around this level where our black horizontal line is, and this market did in fact do that. We ended up pushing up into that level and then pulling back. Where did we pull back to? The exact area that we talked about in last week's prediction. The reason we predicted that is because of the hints that the market has left behind. Looking left, exact same analysis we did on the euro dollar. So here, what we have is a market, and we look at the most previously broken level of resistance, right? A market in an uptrend, just like the euro dollar was in a downtrend. Now this USD Swiss in that uptrend, the most previous level of resistance that we broke is right here. This level of resistance has been tested multiple times in the past. So now we're getting that really accurate trading opportunity. And the way we're doing that is by combining the trend of this market. Obviously, this market is in an uptrend. We're combining that with the fact we just broke above a previous level of resistance. All right, now we have two hints that this market could use this area as a area of support and push up higher into trend continuation. Not only that, this level of resistance that was just broken is also a level that's been tested multiple times looking left in the past. So all that combined gives us a pretty accurate trading opportunity. And that's what we're going to be trying to take advantage of here on the dollar Swiss this week at the trading channel, is some kind of support bounce off the 0.9950 level. We've already seen somewhat of a bounce from this level. If we get a retest of that level, possibly a double bottom or something like that on a smaller time frame, we will be considering trading opportunities based on that, or if we get any type of EAP training program entry. So next up, we will take a look at the pound dollar, which seems to be breaking into new lows. This is a good sign for us. Now that the market's broken into these new lows, if we end up closing down here, which we are far away from, but if this market can close below these lows, then the hint that the market's left behind is contained in the wicks and bodies of these previous candles. So what we'll be looking for is a pullback into this square I'm drawing in here. If we get a close down here, we can look for this pullback and trend continuation out of the pound dollar based on a pullback into the 1.35 zone in that little box we just drew. So that's what we're looking at here on the pound dollar. That's our initial prediction here on this pair. And if this pair continues to push down instead of giving us any kind of pullback, we can actually look for trading opportunities on lower time frames in way of breakout trades or some kind of pullback trades on lower time frames all the way down to the 1.3320 level. That's what we'll be looking for here at the trading channel. And if we get down to that level, it's a nice place for possible counter trend bounces here out of the pound dollar. And moving on to our final pair of the video, last pair we're going to take a look at is the Aussie dollar. This pair is still hovering around a possible level of support. If we look left, here we have our support level that was broken most previously. This market has broken that support level, pulled back to our previous resistance, and since then pulled back and has been consolidating around this area. So currently on the Aussie dollar, we're not really looking for any kind of opportunities. The only way we will be looking for opportunities on this pair is if this market gets all the way back up to this resistance level, around 0.755. That's an area that we can take a look at for possible shorting opportunities and trend continuation out of this pair. And if we get back down to this previous support level around 0.745, that's also an area we can take a look at for possible long opportunities while we're in this period of consolidation here on the Aussie dollar between the 0.755 and 0.74 areas. So that's the trading opportunities we're taking a look at for this week based on the hints that the market's leaving behind, just like the famous novel Hansel and Gretel. So guys, I hope you enjoyed this week's video. I hope it brought some value to your trading. And if you are struggling in your trading and you need help beyond the scope of what we offer for free here on YouTube, then feel free to check out any of our paid programs. The link for those are in the description below. We are currently working on a brand new EAP training program, some brand new course material that's going to give you a step-by-step process to creating a full trading plan around a tested strategy that I use in my own personal trading. So that's going to be some pretty cool content. You can find a link in the description to learn more about that new content and to get involved and to get notified when that program is released. We're planning on releasing that in the next couple of weeks. And if you want to get involved before the price increase, because as soon as we release that program, because of the work and time it's taken to reproduce all of that content, the price of the EAP training program will be going up for new members. But if you are an existing member, your price will be the same. So if you want to lock in the rate that the EAP is currently at instead of getting hit with that price increase, then feel free to check that out. Feel free to go ahead and sign up for the EAP training program. Otherwise, feel free to look around our YouTube channel. We have plenty of free information that can be valuable for your trading and that can help you on your journey to trading success. This has been Steven, your honest trading coach. If you liked the video, please go ahead and click that like button. Don't forget to be subscribed. Don't forget to click that notification bell. I wish you the best of luck in all your future trades, and I'll see you guys in the next video.
Fearless.